The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, this 10th day of November, and it's my pleasure to be here Monday through Friday on market days. And what's really important about today is that the Dow even extended that leg C. And of course, I have to remain bullish as long as the buy mode in the Chapman wave is operable, and that's exactly what's going on right now. And I do believe this is the week that we're going to start to see some changes in sector rotation. Not sure exactly how it's going to work out, but we will know within the first couple of days of this week. So most importantly right now is that the Dow is up 17 at 17,591. The S&P is up 4 at 2,036. The comp index is up 15 at 4648. And you've got gold up. Gold is down 8 at 1161. Silver's down 13 at 15.58. And you've got, let me just move this away here. You've got crude oil, so high-grade copper is still over 3, so 3.03. You've got crude oil down 14 cents at 78.50. Bonds are down 6.30 seconds at 141.15. Now I'm going to talk about something that I consider to be quite important. It is the relationship of, in the Chapman wave methodology, it is a relationship of how D's come about, leg D that is. Look at the dollar. It went to a leg D on Friday, reversed, came down. Gold had a very intense relief rally, spiked very sharply from the intraday lows to the intraday highs, and the dollar came down but did not cross negative over under the 9-period exponential moving average today when it pulled back. And one of the things that I'm looking at, one of the reasons why I went into a gold stock this morning for my subscribers, if there is going to be further action to the upside, this particular low price, very, very low price stock should participate on a percentage basis, but it is not one of the best stocks. It is not even close to one of the best stocks. It is just a stock that participates. And that's the only way I wanted to do it. I didn't want to overspend to get a stock that would move very, very well, but it was way more expensive, and then give in percentage terms perhaps maybe a little bit better, maybe a little bit worse, but about the same percentage as a low-priced, inexpensive, something you just tuck away as if you've got yourself an overall mixed portfolio, a portfolio of different sectors. Could be industrials, financials, it could be maybe biotech. It could be something, as I say, in the gold area, maybe an interest rate sensitive stock. We have a very mixed portfolio. In fact, I'm just trying to look at it right now. A very mixed portfolio, energy, just whatever it is. We're there because this is the very important phase that says to me that the MACD, the moving average convergence in the daily chart of the Dow, and the stochastic holding at 90% and the relative strength confirming the strength in the dollar says to me this is just a high-level consolidation thus far, that if there is a peak D and it becomes a serious peak D, and this chart right just kind of hanging out here, that's the 120-minute chart. It went to a rogue wave peak F at 86.19, recovery high, a multi-decade high, and then what happens is pulls back very sharply, but because in the arch formation, in the Chapman wave methodology, this arch formation is so important. And what happened is the price on the recent pullback held above the starting point of the brand new buy signal at 87.13. We went to 87.22 and then ran up this morning. And that's saying to me that so far we've got to consider that within the context of the dollar, now I have to move this away. This is a 120-minute chart. You'll see if you're looking at Tiger TV, it is being moved away. Let me just go there, if you don't mind. Take a moment. I'm just going to give me a second. I'd like to actually see what you see, even if it's going to be on a smaller screen. Beautiful technology we have here at Tiger TV. So you go to TFNN.com. I just merely click on Watch Tiger TV. Oh, it's already there. But that gives you the bigger picture. And right now I'm looking at it, and I hope I haven't got my volume on. I don't think I do. And yep, I have it very soft. Okay. Now, what's really important about this is that you've got the daily, the weekly, and the monthly. Now, let me show you something here. I've had questions over the last couple of days about where is the USD JPY, the dollar Japanese yen currency pair, going to? Well, I'll give you clues that I'm looking at. The dollar is in leg D in a very quick acceleration with a very quick move to a leg D in the weekly chart. The MACD is still very strong. The stochastic is not confirming this particular rally. It's at 89, very good, but it's not in the 90% area that it was in before. And it has 86.10 as very important support, and then 85, I would say 85.70. Now, 86.42 is the 200-period exponential moving average support in the monthly chart. Now, look at this. Since the dollar broke down back in January of 2003 under the 200-period moving average, this is the first time since 2003. Actually, it's late 2002, 2003, early 2003, that the dollar, in fact, has gone back to the 200-period moving average, touched it, broken above it, and that's saying, I'm in play. That 200-period moving average is going to become support, resistance, and then we'll see if it becomes a trigger for a brand new move to the upside. That's still early in the game. Why? Because we're still in the Chapman wave. Lowercase h goes to a lowercase m pattern. And we are only now breaking out. And if the dollar gets to the 88.90, 92 area and can remain there for 3 weeks, that's going to be really important. Look at the USD JPY. Sharp pullback under the 200-period moving average, broke out finally, and actually that goes even way back. That goes back to 19. I don't even know if I've got it here. Let's see if I've got. Yeah. There it is. 1985 February was the last time the 200 period was touched, but only briefly, and then again in 1982. I mean, this is going back to the Reagan days. But no, it's going back to the Carter days. Look, there it is. Above the 200-period moving average back in 75 and 76. So you can tell how important this particular 200-period exponential moving average is in my work, because it's saying not only have we broken above it, but we have pierced it, and we have gone to the left side, right side price time match, which takes us to February of 2015 to be able to get back into the 120s, and 124.13 was the high. That would be 124.13 was the high of June of 2007. In the Chapman wave cup formation, in a left side, right side price time match, we've already touched the resistance line. I would like to see it go a little higher to say to me, yes, there's a chance that this particular candle right here, not the high, but before the high, it came in October of 2007, and that high was at 117.90. So that's the upside. So what's the downside? Well, on the monthly chart, the 200-period exponential moving average is at 107.41. The 9-period exponential moving average, this black line right here, just for this purpose, I don't even know if I want to change it. I'll make it thicker, just for this purpose of demonstration right now. So format. Wait, whoa, wrong line. Nope, I don't want that line. I want this line right here. How can I get it? How can I get it? There. Okay. Input, 9, good. Scaling style, Wow, I've already got it thick. Just for now, I'm going to make it very thick. I have to get rid of it, though. There. That's the line. See that big, thick 9-period exponential moving average line right there? Look how beautifully it was resistance all the way for years, from 2007 all the way into the breakout. I'd even put it into 2013. Now look at, and you've got to remember this, and I don't know how many people are aware, but currencies stay in position for a very long time, and I'll explain why. Because it's not you and me and even institutions that are getting positions. It is countries. And when countries put the backing in, they not only have to do it for a lot, they like Fidelity or one of the big mutual funds, when they start a position, they don't just get the whole position and that's it. They scale in. They scale in. They scale in over months. Sometimes it can be 6 months, sometimes a year that they're scaling in. Well, if you're scaling in, you're not going to turn around and get out in a week after your final scale. It doesn't work that way. You're even prepared to put up with the downside because you've spent so much effort and time getting into your long side. So I suspect that this currency, the Japanese yen, and that the dollar are going to move to the upside, but the USD JPY, the dollar currency yen, is more intricately involved. So it could do a little bit better. Maybe not on a percentage basis, but it could do better in the price movement. Okay, now let's get out of this. I'm going to put it aside and let's see. Is that, yep. And say, here we go, USD JPY. And why am I spending some time on this? I'm spending some time on this because the general markets have gone generally in the direction of the currencies, and the currencies have gone together with the general markets. So when I look at this, I'm saying leg D in the weekly chart. The MACD is good. Stochastics not as good as it was at peak C in the weekly chart of the USD JPY currency pair, dollar Japanese yen. And when I look at the EUR USD, look, that's doing the exact opposite. It's only in leg D down. I'm sorry, leg C down. I might have missed. I think I must have missed something. 1, 3, 3. Just as well I did this. I did miss one thing. I thought it had to correspond. It's in leg D to the downside. It's a mirror image of the other ones that are of the euro, of the dollar Japanese yen. So what I'm looking at here is that there's a really good chance that this trend line support but under the 200-period moving average, and right there to be exact, in the euro dollar is going to be tested, and it'll be tested at 1.23. I'll be right back. Basil Chapman, Tiger Technicians Hour. Dow's up 18, S&P's up 4, and I'd love to take the calls at 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of the Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, let me just check over here. A couple of questions that I had been asked about I'll get to, but let me do this before I forget. I'm just bound to forget. Boston Symphony Orchestra, Andris Nelsons conducts Stravinsky's Rite of Spring, just an incredible piece back in 1917, 1919. It was written, a major breakthrough in music, and Tchaikovsky's Hamlet, as well as the American premiere of Brett Dean's Trumpet Concerto, Dramatis Persona, with soloist Håkan Hardenberger. I happen to hear this is going to be in Symphony Hall November 13th to the 18th. So if anyone's a trumpet player or enthusiast and interested in contemporary music, I heard the premiere of this piece in, it was the Australian premiere by the Australian conductor conducting his own work, and Brett Dean conducted it, and it was unbelievably played by this Håkan Hardenberger, and it's really a fascinating piece. I really enjoyed it. Yeah, it has these contemporary sounds and all that stuff, but I just, having been a composer, I thoroughly enjoyed the piece, and it was beautifully played by the Sydney Symphony Orchestra. But I'm wondering, the BSO with Andris Nelsons, it should be even more interesting because the composer was not really, he did a whole program, was it Sibelius in the program? But in fact, this should be fabulous because Andris Nelsons has actually conducted other famous trumpet players in trumpet pieces. So I'm looking forward to hearing it Saturday night if I can live. I won't be able to be there. Now let's go to our first caller. We got John in Philly. Hi, John. How are you?
Hey, Basil. Good day to you, sir.
And same to you.
Basil, I wanted to ask you about the S&P 500 cash index, the SPX.
Yes.
And the weekly chart in particular. And I've got a very specific question for
I
you.
hope you're not going to ask me about the weekly chart, John.
Indeed.
Okay, fire away.
You have been providing guidance day by day since the October 15th low, and pointing out how the rally pattern since that point in time is just very strong. That in your Chapman wave count, you are not near you're not yet at a short-term top.
Correct.
And last week you discussed the various scenarios looking out the intermediate term, one including on the weekly chart a new Chapman leg A higher on the weekly.
Absolutely, yes.
And so we've got that as a scenario, and of course time and only time will give us that answer, but very specifically...
No. Price will give us the answer, and time.
Sure. Thank you. Thank you for correcting me. I appreciate that. Anyway, let us consider the scenario that the low on the Standard & Poor's 1820 October 15th was an intermediate term bottom, and on the Chapman wave count on your weekly chart, this is new leg A higher. Now,
correct.
My question, in that scenario, and given what you've seen this market do here in the past 6-7 weeks, and more importantly, the past year, do you have any ideas you can share with us as to what one would likely expect to see over the ensuing 2 to 6 weeks, if in fact this is new leg A up, going to a leg D and peak D before the intermediate term rally phase completes?
I spent a lot of time Friday, Saturday, and Sunday on charts. I sent to my subscribers a couple of charts that I consider to be really important based on the Dow. I realize that the S&P is 500 stocks and the Dow is 30, but you can go back historically as long as you want, and you will find that within 3 months, if there ever is a divergence, it won't last more than 3 months, and wherever the Dow is going, pretty much the others are going to go. So using the S&P as an example, but relating it in the back of my mind to my analysis of the Dow, let me tell you exactly what I'm looking at. I can make it as simple as possible. And we've got a break. Most importantly, we've got a break coming up. And if you really want to hear my answer, here's the break, and I'll be right back straight after the break. John, can you hold on?
I want to hear that answer, Basil.
Okay, I'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi folks, Basil Chapman. So we've got a question here, and of course not only is the $64 question, I always hear people saying it's a $64 question, or they say it's a $64,000 question. But it's the same thing. It's a question that if one could answer definitively with conviction and assurance, there's no guarantee that they're right, no matter who. It just doesn't work that way, because this is the market that we're talking about. We're not talking about anybody's individual opinion. And the question is the S&P in a brand new buy mode? And there's not even a buy signal, it's a buy mode. If this is a brand new leg to the upside, and what's the reasoning for it? How can you justify that kind of reasoning? Well, I have slightly different notation in the Chapman wave in the different indices, and as a result, the answer, I believe, lies more in the way the Dow responds than in the way the S&P responds. But I'm going to make it real simple. If at any point in the next 3 weeks, 2 to 3 weeks, by going into the end of November, and that includes Thanksgiving weekend, which is usually positive going into the weekend. That's number one. Now I'm going to shove that aside. I'm also going to say, historically, if you go back, if the Dow gets through, if the general market gets through any selling phase that occurs in the September-October time frame, and then goes on to make new highs, even if it's just recovery highs, invariably you will see a move to the upside, making December the 31st the last trade of the year, almost at the highs or very close to the highs. So using that, let me just quickly check what that was, if it was a question from, yep, there was 31. Okay, I've got a bunch of questions to answer there as well. So, John, this is what I'm going to say to you. First of all, as you mentioned, this is leg C in the daily chart of the S&P. It happens to be leg B in the S&P futures. Let's just stick with the S&P cash. There's a pattern that I look at that says, between the stochastic and the MACD, when there's a certain pattern that forms, it takes you powerfully into leg A, B, and then C, and then the stochastic would invariably pull back as the MACD's momentum, the fast-moving average, that's that green line right there, continues the turbocharged pattern and allows for 3, could even be 5 sessions before there's a sudden move up to leg D. At that leg D, other things can happen because the stochastic could have had its rest, started to come back. The MACD's fast-moving average can hold beautifully, and that says you don't have a sell signal until those particular indices break down or you get to an E or an F. Now, so that's the data that says, in all time frames, fabulous action. Now let's go to the weekly. Making it real simple, forgetting about the Chapman wave at this particular point, just making it real simple with patterns. If you look at the up channel that's involved in the weekly chart, you'll see that there's just a beautiful up channel, and that the price broke down in that move down into the October 15th low. It broke below that channel, and very often what you get is a pattern that says, besides the fact that I've got that falling axe formation, not just in the daily but in the weekly chart, and the S&P has already gone to a 1-to-1, I believe, in that. Let me just quickly check, because this is going to help us as well in the analysis. Let's just go right to there. And this is really unusual, not to have a trough below the declining trend line of this pattern that I call the falling axe. And there it is. And that should take you to about 2054, 2048 to 2055, okay? And we're at 2037 in leg C. That's if there's a 1-to-1. That also takes you to the up channel's resistance line, and if it's this week, it is to 2051 to 2072, the area that I call the Chapman wave inside track repellent resistance area, or cell zone sometimes. The MACD is just this moment, the week has only begun, so the MACD is just barely crossing positive, but it is a good sign. The stochastic has now moved up into the 86% area, which is very good. It's still a retracement pattern in the technicals, but the price has gone to an all-time high. As we speak this very moment, it is at all-time highs. So to make it really simple, if the S&P in the next 2 to 3 weeks closes under 2000 to 19, I'm going to make it, I want to be a little safe. If it closes under 1975, this becomes, almost certainly it will become a failure pattern, and we should expect a really good chance of testing the up channel's former support level. Then it became resistance, and where the falling axe is, right in the 1941 area. So I'm going to make it real simple. Even moving to a leg D, which would take us probably above 2000, and what's the high today? 2038, would take us probably to about 2039 to 2041 at least, says that there's every chance that this particular pattern we're looking at right now is not the V-shaped Groucho Marx eyebrows double top pattern in the S&P, or, now if you don't mind, I'm just going to move over to the Dow because I want to give the relationship of why I'm looking at patterns that are a little bit different. You see, the difference here is no matter how I count it, I cannot get the bar that I wanted to be a low was 16,015 back on the week of the 11th of April. If I could have got a D, and that was a pullback from D, I would have had what I call a Chapman wave unconventional flat base restart. Everything about this pattern says that's what it should be, and that says it should take us to another leg up, which is this E, It probably won't get to an F, but instead it's going to come all the way back and retest the 15,855 low. That's what the pattern of the Chapman wave unconventional flat base restart would indicate. So I like to do things, and I like to make it as simple as possible. So I'm going to answer you simply by saying, as of this moment, I have to stay with the buy mode in the daily. I have to stay with the fact that the S&P, and this is your question on the S&P, so I'm answering you about the S&P, made an 1820 low and has now gone to an all-time high. And everything about the candles, 1, 2, 3, this being the fourth week, says that the candles formed so far makes the 1990 9-period exponential moving average to maybe 1982, maybe 1980, somewhere around there. Very strong support, but if there was a close below that I'd have to say 1975 to be safe. 1975 level, that's a pattern that has that look, that you know the pattern I'm talking about. It's the Eiffel Tower, straight up, straight down, looks like an uppercase A. That's the look it would get. And everything about it would say there's a deflection lower in the MACD. Stochastics way back down under 80%, probably to be back under 65%. Very negative. So I do not like to say, yes, we can go up. No, we can go down. I'm going to say to you, as of this moment, everything is looking very good. If I look at the Qs, if you don't mind, I was asked that question, so I'll do that now. The Qs have just snuck to leg D, but the stochastics at 95% and the MACD is very good. Now, I need to talk about one other thing because we're talking technical analysis. When the stochastic goes into the 90% area, as you see it did back in May the 27th, to a turnaround June the 11th. As long as the stochastic is holding up there, it's very good. If the stochastic breaks decisively and then starts to trade under 80%, now let's look at an example. It went to, in August of the 20th of August, somewhere around the 20th of August of this year, the stochastic went high, the price went high of the QQQ series, and then there was a turn down, a very sharp turn down, the beginning of September. The price continued higher, but then there was a plunge from 100 down to 90. That's a 10% correction and a 9%, almost 10% correction, and that's because the stochastic failed. So I'm going to say the same thing here. If the stochastic starts to break down, it's a heads up to say, excuse me, that the daily chart is showing every indication of pulling back sharply, and then we'll have to see how the weekly chart is impacted. So my answer to you is, as of now, I don't want to. This week has already started. Ooh, maybe it hasn't. S&P, did it make a new high? No, the Dow did, and the Qs did. But the S&P, yes, has extended.
The S&P did make a new high, yes.
So now that means this week has extended whatever the leg is, E, and ironically enough, in the S&P, I can call this a new E/A because it did not break underneath the low bar of, it did. All right, the instant restart. Okay, it's the same thing as the S&P. So everything about it says if you break the start of a new buy signal, in this case going under, give me that number, under 1862, which it did, it certainly did, went to 1820, a brand new high should have every indication that we've made a brand new leg up. If this is a brand new leg up, I have to call it new leg A. If this is new leg A, just counting each, if at best we make a sawtooth move to the upside, and at every other week we have a brand new peak, that means we cannot get a new peak D in the weekly chart for 7 to 8 weeks from now. And that would take us to...
Can I ask you very specifically?
Yes.
The S&P has rallied, 210 points plus since the low in October.
Yes.
And we are, let us assume this is new leg A up in the weekly.
Correct.
Are there any rules of thumb given the patterns that you're seeing here, that suggests before peak D occurs, assuming that's what we're dealing with, will be, another 200 points or some numerical figure. Any rules of thumb that you find in your work at all, please?
Yes. If I'm looking at the pattern that's formed right now in the monthly chart, and this is actually, you've raised a really good question, because this is what I'm asked all the time about. I ask myself, everyone's asking the question. Look at the way there's been a ceiling. I'm not sure what the percentage is, but in just visually, you can see there's been a ceiling to the upside above this big, thick 9-period exponential moving average that has not been broken in the S&P. If, in fact, the S&P and if the Dow at this particular point breaks into the 18,000, if breaks above 17,950, 17,990, really strong resistance, this is the millennial resistance, there's a chance that people will be so forced into the market, we would repeat very much what happened in 1999-2000, right at the turn of the century. And if that's the case, then there will be an acceleration, and out of the blue you'll find this green line. I'm going to make it a little bigger so everyone can see. This green line, the new green line, that is resistance up at, in the S&P, at going from 2,095, depends which month it is, 2,100, 2,120. That green line is going to be key. And this is the new Chapman wave inside track resistance repellent line. And if we pierce that and the public is forced to get into the market, we will get the acceleration going to a major, major high in 2015. And that's going to essentially, I suspect, I need to add one other thing here. In 1929, there was a March, I believe it was March, tremendous pullback that scared the daylights out of everyone. When the market came back and then went to its 368 all-time high in the long weekend of 1929, what happened was people were just forced into the market. They had no choice. Everyone was talking the market. If you read about it, those cruise ships that used to have very wealthy people going from New York to London on the Queen Victoria or Queen Mary, whatever those big castle liners were, they were looking at those glass dome tickers that came into existence in 28 and 29, and they were following their stocks. Of course, they were getting all the information sometimes a day or two late. So when the crash happened, this is an incredible story. They were looking at prices that they could have prayed that they got those prices, even though they were down 20, 30, 40, 50%. Why? Because by the time they got the real prices on that day, at that moment, that in real time in New York, the prices were way, way lower. So that decline in March, I suspect that that's a decline that will not be the major top in the market. It'll be something to watch. So I don't want to be talking big smashes and crashes right now. I just want to conclude this, John, to say at this particular point, the weekly chart has every indication that it's a brand new move to the upside, even though I never would have dreamed that we could do that so quickly. And I want to deal with it like that up until now. And the resistance is up in 2050 to 2090. Hope that helps you.
Thank you very much for
You
your
take
time.
a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, folks. We got Larry Pesavento coming up next. 3 a.m. in the morning in Australia. Sydney, I can't believe it. I could not do that. For me, it would have been, with the time change, it would have been 2 a.m. Wow. Let's get him. Congratulations, Larry. Mike in Pennington, New Jersey. Hi, Mike. How are you?
Good, Basil. How are you doing today?
I'm doing well, thank you. You'd like to...
Amber.
Amber, yeah. AMBA. Now, Amber is, I used to have this notated. Amberella Inc. I can't remember what they do, but whatever they do, it is the hot product. Right now, it's trading at 49.20 AMBA, up 206, leg E in the monthly, leg D in the weekly. Wow, this is looking good. The D in the weekly and A, B, C, D in the daily. So 3 Ds with 81% in the stochastic. MACD looks good in all time frames. Wow. So what are you doing with this?
I want it to become another Tesla.
Okay. Now, what do they do? What do they do?
They make the GoPro chip that the GoPro camera works on.
Oh, of course. Okay, now I remember why. Okay, now, I was looking at GoPro yesterday. I didn't remember where I was, but I was looking at the whole section with GoPro. And I'm saying to myself, gee, many other camera companies do exactly the same thing. I wonder what the thing is for them. It must be the whole network that they've got, as well as all those videos that show what happens when you wear GoPro. So do you have this at all or not?
I have the 45. I bought 200 shares. I was going to empty the entire account and just go all in. And I said, no, you better not do that.
Yeah, you know what? I know it sounds great, and you would have been looking great, looking wonderful, but a long time ago, I got done putting all my eggs in one basket, and I'll tell you why. When it's great, it is fantastic. But when you are wrong, it creates such a problem psychologically and in every way. So all I'm going to say to you is, you've got positions here. It's doing fantastically. I suspect that the big test comes between tomorrow afternoon and Wednesday morning. If it pulls back, and it suddenly pulls back under 45, 59, well, you don't want to be there. I'm going to say to you, some part of your position should have a stop. It looks great. And I'd like you to keep a core position as long as you can. You got in beautifully. I don't want to be the one to tell you to get out too early, but I do want to tell you that when it turns around, like GoPro very often has very sharp moves suddenly to the downside. This could follow. Yeah. And so what I'm going to say to you is you've got a nice eye now for this. And I'm going to say to you, try to treat it that you can try to keep a core position if it holds about 46. It's at 49.14. But I would start to lighten up a little bit if it pops over 50 round number. Watch that 50. If it closes over 50, I'd say, okay, take one part of your position and divide that into two and take off something at closer you can get to 50. Keep the 300, you say 400 shares?
200 shares and two call options.
Oh, you got call options. Okay, great. So if you got the call options, then what I would do is, I take off one of the call options if it can get to 50.
Yeah.
Because you can always put it back on, but at least that's a fabulous gain, and it kind of covers you for the other call option. But what I just said to you, as it gets to 50, that's where I'd be looking to say, if it closes nicely over 50, you can start raising your stop. If it just kind of hangs out at 50 and it doesn't want to go above it, take something off of your 200 shares, take one off. Don't be greedy. You've got an eye for this. You'll be able to trade in and out of this for some time to come, as long as the technicals remain as strong as they are. But try to keep a core if it's possible. Hey, congratulations. I think you did a great job there. And the only thing I'd say about the call options is if the call breaks under 42, if the price goes under 42, I don't have to tell you, that's a real problem. So somewhere in the... Don't take a loss on your call positions. There you are. That's the best advice I can give you.
Profit protecting stop loss.
Yeah, I think so. Hey, nice. Congratulations, Mike. Folks, stay tuned for Larry for event. I didn't get to all the questions. I'll do them tomorrow. There's plenty of time. So stay tuned for Larry and check my opening call out. We've got some nice positions on. I'll be back tomorrow.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.